Yeah, I'm losing my edge.
I want to move over to stocks here for the day. Today we're talking about a new view on the same stocks. At the small exchange, we're looking at creating a ton of new products. The first three products that we have out here is a stock index, a dollar index, a nice foreign exchange asset class product, and then that small precious metals, which combines gold, silver, and a little taste of platinum in there. We're going to create a ton of new stuff on top of these products, very interesting ways to look at different asset classes. But in terms of a stock index, Pete, you kind of just have the same stocks to look at. Sure, new stocks IPO every year, and you could create an index that literally just gauges the price of the newest stocks. But for the most part, you've got a few different indices that all contain kind of the same stocks, right. and it can be hard to create a differentiator.
And it's almost like a pyramid that on these moves keeps getting narrower and narrower.
Yeah.
So the same smaller subsection or smaller group of stocks that are replicated throughout all these indexes are what's driving them, and that creates challenge. There is no differentiation at that point.
Yeah, and so when we were tasked with creating a new stock market, you could go in there and you could say, okay, well, you've got your NASDAQs and your S&Ps that are market capitalization weighted indices. And so what's going to happen with something like that is they're going to give a ton of weight to the biggest stocks in the market. And this is for better and for worse. It's for better when obviously they're rallying as they have, those big stocks the last few months here. If you're just straight up long, you're a passive investor. But Pete, for active trading, a stock market that makes new highs, that is overweight in those, like you said, that top of that pyramid, those few stocks, it doesn't create a great environment for active trading. And it's something that we wanted to avoid with our stock index here at the small exchange.
Yeah. And what's that, invoid? That's a new word.
I don't know. A bunch of guys were walking by. Everyone's having lunch here at the exchange. I got a little bit distracted.
Frank's hungry. But you're absolutely right. That's what we wanted to do, is not just build, again, tiny is great. Small is great because it gets us into a comfort zone where our mechanics can not be consumed by fear and too big a product, but a new type of exposure is what we're always trying to gain. You know what? We always want to add new product. I always make this analogy. Traders are like sharks. They're not moving forward, they're dying. And part of that moving forward is adding new product. But to add again, I wouldn't trade Qs, NASDAQ futures, and then a tech index. What am I trading?
Sure.
The exact same thing.
Well, it's even gotten frustrating. We are looking primarily at NASDAQ today, which is very tech heavy. Even jumping from NASDAQ to S&Ps, Pete, is not that big of a deal when you look at those top 5 holdings. They both have, I'm pretty sure, the exact same top 5 names, and they both, NASDAQ is more of a ridiculous example, but they both have 20 to 30% of their index in those top 5 names. Right. So NASDAQ is great for a lot of reasons. If you've been invested on a passive long-term basis, this has been a hell of an index. But we created a small stock index, and so many people want to be the haters that I reference every once in a while, that want to say, well, then what's the difference? Why the CME came out with Micro NASDAQ and came out with Micro S&Ps. Why would you even come out with a stock product? It's because there is still very unique opportunity here. And I'm going to show you today just how unique opportunity could be while holding the same names. This here is a market this is the small stock 75. Compared to this NASDAQ here, a ton of back and forth in this time frame, a huge rally, almost a faster rally than the NASDAQ at one point, and then a steep sell-off, just a bunch of back and forth relative to, we'll get to that in a second, but relative to a stock index that just kind of sold off of its all-time highs and then immediately went right back. But what's really intriguing, Pete, is one, of course, a stock market that isn't constantly going through new highs, constantly trending is better for, I think, better for active trading. But what's really unique about this is, Pete, the small stock 75 and NASDAQ both hold Amazon, Microsoft, Apple, and Google. And it's just a matter of how you create that uniqueness, right? Because when you've got too much Amazon and you've got too much Microsoft here in yellow and too much Apple, you get this one-sided market. But when you kind of equate these exposures to other markets, like your energy markets, your financial markets, you get this. You get something that made new highs, sold off, went back to those highs, sold off, something that's more two-sided. And this is it. These are the numbers here, Pete, right?
Yeah, absolutely. And you know what? That really speaks to adding that, as you said, that taking that ever narrowing cone of what I'm actually trading out of the equation. And I think the back and forth piece is so important for all of us. We were just on a call with a new group of traders that's coming on board tomorrow. And they were as you saw the SM75 trade, they were like, the elasticity, the back and forth is what's so attractive to these guys. And I think it is to everyone. It's one thing to have something back and forth. I mean, CME Bitcoin has a ton of back and forth, but it's also, you know what? It's moving $5,000 a day. That doesn't work. That doesn't work for me. Again, that's something random in and of itself, but I need something that I'm comfortable around that movement. If you pair movement and elasticity, which is basically, elasticity referring to the amount of movement and the size of that movement in terms of how it affects my account, it's incredibly powerful. But this is a very good reminder about, diversification. Sometimes the indexes are more, it's the nature of an index and its construction of what it represents. I don't think when they built the NASDAQ index, they were thinking that, it would be consumed by those 100 names, would be 90 of them would be irrelevant to what its performance is. But they ended up with something. Exactly. We were fortunate. We could build something, learning from those mistakes and building something more interesting.
Yeah, I mean, on that note, Pete, I don't think that, and this is, when you create products, there are so many different things to look at. And I think that you're right, that there was no intention when they made this NASDAQ index market capitalization weighted that they wanted to say, they probably never thought that 25% of their index would be 2 of the 100 names, which you're right, deems probably like 70 to 80 of those stocks in the 100 names completely meaningless and arbitrary on a day-to-day basis when you're looking at trading the NASDAQ. And when you're overweight these things, Pete, you just trend like the individual stocks. And it's the thing that I've kind of joked about recently, which is, I guess the NASDAQ to me at this point is just a nice summary of these top 5 names. Yeah, right. But at the end of the day, man, if you have a stake in Amazon, Apple, or Microsoft, the NASDAQ is kind of useless to me. Whereas here, you've got an index that has a stake in those same companies. But and here I'm going to borrow a term from early COVID days, we flattened the curve essentially with these weightings. You went and you saw, okay, NASDAQ is bunched up, S&Ps are bunched up to an extent, and we want to not necessarily say, oh, we need no-name stocks that no one's ever traded, but we want these same stocks and new ones, and we want them to be on more of an equal playing field so we have that elasticity. It's funny, Pete, you've got feedback coming from people who are in essence saying, well, why would you create a small stock market? CME just, barely beat us to market with that by a few months with their micro S&Ps and micro NASDAQ. But then also people saying, well, why does your thing move so much differently? Right. And why is it? Well, guess what? Those two things that some people might at first blush look at as being negative are the two exact things that we wanted to marry, which is this small size that the big institutions are trying to come down to get the retail trader, combine that with something that's truly unique and not necessarily finding ridiculous, crazy stock names, but the way that they carry themselves truly unique so that they don't get overweight. And Pete, we've created a scenario where the rebalance of this stock market will mean that year after year, we're keeping away from getting overweight. Like this
Right.
to me, Pete, is a product of
right. The mix of staying relevant and
exactly
balanced. Yeah, absolutely.
This to me is a function of, not staying updated or fresh or whatever you want to call it. Something that as companies get big freaking market capitalizations, it kind of gets carried away to just being a few stocks here. And, the SM75, making sure that it doesn't get overweight. It's going to be fit. It's going to be elastic for hopefully ever here. And I think like you're talking about with that anecdote, this white line here does create for a little bit better elasticity, a little better back and forth trade relative to this blue straight shot to new highs above 10,000. And even with the sell-off today, Pete, still holding in at 10,000. It's funny that, you want something, if NASDAQ were to exhibit bigger moves to the upside, you would hope that it exhibit bigger moves to the downside. That's what those traders you were talking to mean when they say elasticity. You're not seeing that. You're seeing bigger moves to the upside and smaller moves to the downside. And that could create for, I like the opportunity in SM75 on its own, moving back and forth, but also I know Tony Batista at the Tasty Trade Network has also looked at this, looking at a pairs trade between Micro NASDAQ and the small stock 75, because you would be in essence trading this gap here between the white line and the blue line, the big rally of the last couple of weeks in NASDAQ relative to kind of flat movement of the last couple of weeks in small stock 75. And it'd be 4-1 and for small stock 75 to 1 Micro NASDAQ, an interesting trade. And Pete, something that gets you smaller, right, with this pairs trade.
Absolutely. And Frank, you hit on it too. It's not either or. It's like I trade smalls or I trade CME products. It's let's expand the base and let's use what's interesting against something else. And that's where the opportunity lies. Don't feel you have to you have to pick a side here. And pick a side as a trader, and that's incorporating as much product as possible to find an opportunity. So you know what? You look at that, even that Micro NASDAQ move is
still 450.
Yeah, that's a big move. And on almost now $1,650 in margin. So is it smaller than the big one? Yeah, the 16,000 rattles my mind. But it is what it is. Span margins the way it is. But that 450 is, there is a certain amount of, how many bites at the apple can I do this? In ranges like we're having, trying to get good trade location with one choice is next to impossible to do.
Yeah.
Give me the ability to scale in and scale out of a position and still maintain that comfort zone around movement. That's empowerment, and that's what we're giving.
Sure. And what's nice is the pairing of the two together brings the Micro NASDAQ from $450 a day to $300 a day, that 4-1 that we're referencing here. But yeah, also you think about it just from the pure, okay, you got the small stock 75 showing that greater elasticity, that greater back and forth, not just rallying every day as Amazon rallies every day, but also the small stock 75 on a daily basis moving a third of that $450, just moving $150 on its own. So truly, and this is what we set out to do, man, truly a smaller market, moving a third of the Micro NASDAQ that has a new look at those same stocks, a truly new view of the same stocks here at the small exchange.